Hi, this is Jason, and welcome to Red Pill Finance TV. And in today's episode, which is episode 1, I thought it'd be fitting to talk about Bitcoin's Genesis block. So, the Genesis block is essentially the first ever block that was mined on Bitcoin's blockchain. And this was done around 3rd of January 2009, because in the block there is a hidden message which goes as follows: the Times 3rd January 2009, Chancellor on brink of second bailout for banks. So the Times actually refers to the Times newspaper, where we did see this headline of Chancellor bailing out banks. So essentially it is a time reference. So as brilliant as Satoshi Nakamoto is, i.e. the creator of Bitcoin, I don't think he or she was able to predict the future. So what this meant was Bitcoin incepted either on the 3rd of January 2009 or thereafter. And the Chancellor in the UK was Alistair Darling at the time, led by Gordon Brown, who was the Prime Minister. And of course, the bailout of banks referred to the financial crisis of 2007 to 2008, whereby a lot of banks got into really toxic assets in the subprime mortgages and therefore put themselves at risk of being operational and being liquid enough to pay customers who, for instance, needed to withdraw money. So banks were struggling with that, and in particular in the UK, this bailout refers to mainly Royal Bank of Scotland, RBS. So in order for RBS to remain solvent and operational, nearly £40 billion of taxpayers' money was put into RBS in order to provide liquidity, to provide cash. And essentially, taxpayers were the majority shareholder of RBS for a long time, actually, nearly 10 years, until slowly the RBS price recovered and the shares were able to be sold at profit and therefore fill the deficit caused by the bailout in the first place. So I think this is pretty interesting because Bitcoin's inception really came off the back of the financial crisis. And the financial crisis meant that a lot of liquidity, a lot of monetary policy was being actioned by central banks, and therefore creating money in order to bail out certain institutions. And this is very interesting because there is thought out there that Bitcoin is anti-government, Bitcoin is anti-central bank. So what this means is Bitcoin is decentralized. It's not issued by a central entity. And Bitcoin is deflationary in nature due to its block reward reducing every 4 years. So this is contrasted to fiat, whereby fiat, i.e. our everyday money, is issued by an entity. So this would be the central bank, which could be, say, the Federal Reserve, Bank of England, European Central Bank. They issue fiat. They have control of the supply of money. And fiat, of course, in most cases is inflationary. So over time, over a long period of time, the kind of spending power for one unit of currency reduces. So that's what it means by inflation. So Bitcoin is essentially the opposite in those two aspects of centralization and inflationary features. However, I think what is interesting is if you read the Bitcoin white paper that was published in October 2008, so before the inception or the official inception of Bitcoin, in that paper, Bitcoin is focused on being a peer-to-peer payment system. So being able to settle transactions between buyers or sellers or sending money over in a fashion that does not rely on a retail bank, for instance. And there isn't much emphasis of it being deflationary and it being kind of anti-government, anti-central bank. And maybe that was done on purpose in that the white paper wasn't meant to be aimed in a political nature or economic nature, but its main emphasis was it being a payment system, which is interesting because right now I think that Bitcoin is more of a store of value. It's closer to that than being a payment form. But anyway, I think it coincided at an interesting time. It coincided where banks, central banks, issued a lot of liquidity and actioned a lot of monetary policy, and therefore the risk of inflation increased because by pumping in hundreds of billions of dollars or pounds, essentially you're increasing the money supply in the system in order to bail out banks, which means that inflation devalues the currency and it devalues the spending power of the money that you earned. And I guess it's interesting how, from 2009 to 2021, how such a new or recent phenomena has existed for and how much market capitalization it has. And I think Bitcoin has been accelerated by events. So, of course, we know the financial crisis, as we just talked about, but also the pandemic, the COVID-19 that we saw in 2020. That really accelerated the consideration and some way adoption of Bitcoin due to, again, central banks' actions of having to take monetary policy, lower interest rates, put in more money supply into the system in order to, in this circumstance, bail out businesses, bail out people who are unemployed or needed help. So there is or has been a lot of monetary action which could lead to massive amounts of inflation this time round because the economy has been dormant for a bit because of this. But once it gets recovered, there will no doubt be a cost push inflation in that when the recovery happens, there will be so much demand that the supply in terms of commodities, energy, raw materials will take a shock and therefore could push price levels up. But anyway, that was a bit of a kind of history lesson, I guess, in some ways. To this day, we don't know who Satoshi Nakamoto is, whether it's a male, female, or a group of people. But we do know that they reference to the Times newspaper, which could suggest that Satoshi was living in the UK or was in the UK at that point in time, potentially. But there are other theories as to who it can be. And one other interesting thing was the Genesis block was it actually rewarded 50 bitcoins, I believe, which is massive. And that 50 bitcoin has not been touched in the address that it was rewarded to. So very elusive. We don't know who the identity is, and we probably won't ever know. And it's probably better to keep it that way, I think. So thank you for listening to this podcast. I'll catch you on the next one.